So in this video, we're going to be looking at how to find the weekly bias. So I'm going to try my best to make it simple, easy to understand, and very short. So basically, to find the weekly bias, you look at opening price on a Monday. You know that during the weekend, the market doesn't move. So when it closes, we're going to wait for a Monday. On a Monday, we're going to mark opening price. So let me just separate this accordingly. So this is a new week right here. So this is previous week. Let's separate everything. We're going to be using either the 1 hour or the 30-minute time frame. Right now I'm on the 1 hour, and let me quickly just mark, or let me just do this. Let me make it simple. The currency pair I'm on is USD CHF. So yeah, do this, go back to the 1 hour. So from here to here, it's 1 week. From here to here, it's another week. So it's Monday, Tuesday, Wednesday, Thursday, and Friday. So let's start here on this week here. So what we're gonna do is we're gonna go to midnight on a Monday. So this is midnight right here. This is midnight. So opening price is here. Let me just mark it as opening price. So when it opens the new candlestick, if like here in this example, the market opens, consolidates a bit, then pushes down. This is a Monday, all the way till Tuesday, pushed down. So let's move down here. It's a Monday, and it's below opening price. So when it's below opening price, we're going to be looking for buys. When it opens and buys and pushes up, we're going to be looking for sells. Hope that's easy to understand. I'm just trying to make it simple, easy. So basically, let's use this as an example. Market open, push down. This is Monday. Tuesday, pushed back up, then went back down. So as it's moving here below opening price, we're supposed to look for a point of interest that's a buy. If I'm making sense, a bullish point of interest, like a bullish order block, fair value gap, breakup block, whatever it may be. So it only started pushing up on it started pushing on a Tuesday. Yeah, on a Tuesday. Then it pushed again midnight Wednesday. It started pushing up. So let's, before we actually look for points of interest, let's look at the next week's thing next week and see what happened then. So here, same thing. We're gonna go to midnight, 12 o'clock. This is midnight. This is opening price right here. So the market opened and pushed up, as you can see. So when it opens and it pushes up, it's above opening price. We're going to be looking for a sell. Yeah, a bearish point of interest. And yeah, so it pushed up from Monday, Tuesday, Wednesday, Thursday. Thursday started moving down. So between Monday, Tuesday, and Wednesday, that's when you have to find your entries, because when you look at it from, let me actually draw it from a weekly time frame, it's going to be something like this. So this is a candlestick, the body, the wicks. So let's say there's a bullish candlestick like this. So when it opens price here and it pushes up, this is the wick. Is it pushing up, then pushing down, creating the buoy? So it's gonna be, remember in our previous lessons, there's a consolidation, manipulation, distribution, which is power of 3. Same thing happens but on a higher time frame. So this is a weekly. We're looking for the weekly pies. So let me just move this. So basically this one is when it's a bullish weekly candlestick for me. Price will open here, create the wick, push back up, power of 3, accumulation, manipulation, distribution. So let's actually look at the chart example. So market opened here, pushed up, so it's above opening price. So when it's above opening price, we're looking for sells. So it started pushing down on a Wednesday. Remember Monday, Tuesday, Wednesday, that's when you need to find entries. Thursdays and Fridays, that's a bit too late. But it is possible, but it's too late. So Monday and Tuesday are the highest probability to find setup. So let's actually start week before we go there. Oh my god, the opening price again here. Here's our opening price. So on the daily, for daily buys, we mark the high, the daily high and daily low. When you're looking for weekly buys, you mark the weekly high and weekly low. So let's just mark here weekly high, weekly low. Let's go back to the 1 hour. So when looking for an entry using the weekly buys, as you can see, this was a bearish week. Started pushing down on Wednesday. So let's say you use your fib from this swing high to this swing low all the way down here. You would see that, okay, there's a OTE here, price pushed is the arrow. Okay, price opened, pushed down, consolidated, pushed up into OTE, open, consolidated, pushed up into OTE, then pushed down. So look, this is the power that I was telling you about. Accumulation, which is here. There's the accumulation phase. There's the manipulation here. And here's the distribution here. Can you see that? Accumulation, manipulation, distribution. So let's say you're looking at the 1 hour and you want to enter on like the 30-minute time frame. Let's go to 30-minute. You did put your fib here. Your OTE, there's a, say this 30-minute order block here. Mark it out. Below the other block, there was liquidity forming here when it was accumulating from Monday all the way to Tuesday. It was accumulating. Then only on Wednesday they did to take out the started pushing. So you were gonna target the down here. Your entry would have been your order block here, stop loss right above. Then the take profit would be these swing lows down here. So here would have been your take profit. So this was this week. Let's see the following week. So following week, price opened, pushed up. We're supposed to be looking for sales when it's something like this. So let's actually go to the weekly time frame and see how it looks there. So weekly low and weekly high. One hour. So this is our open price here. So we can see that Monday started pushing up, Tuesday still pushing up, then Wednesday pushed something like that. So let's say you use the previous week's high, previous week's low, take your fib, push it all the way down this way like this. When it was something like this, you would have used this. Let's use the 1 hour. You take this order block, put it in like this. So this order block is in your OTE. So as you can see that Monday, Tuesday wasn't pushing that much. It was consolidating for a while, like something like this, as you can see. Then the manipulation happened on a Wednesday here, and you see power of 3, accumulation, manipulation, distribution. So if this was an actual setup, you'd have entered right here using this order block, entered here, stop loss right above here, then targeting this swing low of the Monday, low of a Monday. So there's liquidity here validated in this order block, but then I don't know why this trade thing doesn't want to do. But then I was going to show you that could have possibly taken you out before actually respecting. So that's one thing. So I hope this video was easy to understand, and these setups were mostly bearish. So for the next video, I'll make a bullish setup explaining, or let me actually find a bullish setup here. Yeah, let's actually just find a bullish setup right here. Make things easy. So let's use this one, this candlestick here. Monthly high, weekly high, weekly low. So yeah, these two are bullish. So on the 1 hour, I'll start by marking previous week's high, previous week's low is down here, but let's not mark that. But previous week's high. So on a midnight here, here's the opening price. So it started pushing down, then on a push down, then on Tuesday pushed up, Wednesday pushed down before pushing up again. So it will be something like this: Monday, Tuesday here. Monday and Tuesday, there's the accumulation. Wednesday, manipulation. So this entire part was our manipulation happened on a Monday. Then around 8, very same Wednesday, there was I think there was an event here. I can see by the candlesticks, but pushed all the way up till Friday. Kept pushing up all the way up.